Listen, I know.
We got clapped in.
Just talking about how complicated individual stocks are, and then doing that with the economy. It's like, what are you, a 4-year-old? Do you think you could like see the future? It's just nonsense.
What? I don't understand.
The idea, they were talking about how complicated stock picking is and business forecasting.
Not for me, but go on.
And then just the idea that like, just one company is so hard. And then at the economy level where you have thousands of companies and billions of people, and it's a joke.
That's why
Macro's a joke.
That's why I only predict interest rates. Yeah. Like I keep it very simple.
The Fed can't predict the economy, but you can.
Yeah.
Duck Rabbit for 2069.
Why doesn't the Fed see what I see? Said the anonymous guy on Twitter with no friends and girlfriend. I just don't understand it. All right, Packy McCormick is here. This is this appearance 3 for you?
This is appearance 3.
Okay, we are in a fight in a race against Dan Nathan to see who could book you the most. So I think we're losing, but
you haven't made me a co-host yet.
That's true. That's true. Shout to Dan and Guy. We love those guys. I'm so excited that you're here. This is a momentous time. Not only for the markets, which we're going to get to, but for you personally. Packy, you broke 100,000 Substack subs. And so all the podcast appearances are definitely paying off. And what else are you doing? Like, how is this happening? It's a huge number.
I think it's mostly Compound and Friends.
No, come on. 100,000. You have 100,000 people and your open rate is half?
It's about 50%, 54% recently.
That's ludicrous.
That's ludicrous, and it might be too ludicrous. It got good all of a sudden.
That's not going to last. You're not that good.
Well, 100%. And 2, I think something happened with Apple, and maybe it like auto opens. I don't know, but
I open 75 times every time it comes in.
Well, that means a lot.
Hold on, Duncan. What's my open rate?
Don't ask. 8%.
What's our firm-wide open rate?
I don't know about the blogs right off.
What's the YouTube open rate for this?
Fired.
So low you don't want to say it on the air?
Doesn't really apply. The click-through rate is very high.
Oh
sometimes close to double digits.
Robinhood's going to break 10. It's down 13%. All right. So Packy, 100,000.
All right. Yeah.
100,000.
Let's dwell on this for a minute because it's a huge number. And the way you put it, you compared it to the Alabama football stadium, which is what? 100,000 people?
100,077 people.
So more people than fit in that stadium have clicked subscribe on your Substack.
And given me their email address.
Yeah, dude. You're
crazy.
Doing it.
And you started
and a lot more than that because a lot of people have unsubscribed too.
I mean, obviously you started at 0. Everyone
okay.
starts at 0, but you started at 0 like 2 years ago? Has it even been 2 years?
Yeah, so I started writing something else that got me to like 400 subscribers in 2019, but really started this at 400 subscribers less than 2 years ago.
You know why? You know I have so much respect.
You're
for
so
this.
overvalued.
Forget how big.
God.
Forget how big the number is, and it's amazing. I have so much respect because the way that you've done this is the most honest, like intellectually honest way. You're like, guys, I'm just excited about this stuff. I'm not the world's smartest. I can't predict the future. I think most of the stuff I'm saying is right, but all subject to me saying, oh, what an idiot I was. Like, you're doing it that way. So many people who have built big platforms, whether it's blog, Substack, it's like, I'm a genius.
Well, the bigger they get, it's self-reinforcing.
Follow me and I'll save you.
You're the same exact guy.
It is. It feels almost the opposite to me. Like, I feel dumber the more because I'm like, now there's even more people who are smarter than me reading this who work in a particular industry or other, like who know that I'm not 100% right on any of this stuff. So I really do feel dumber with everyone.
Listening to them though is part of what you do.
That's the whole thing, right? You're like, you are a generalist.
I'm a generalist.
No, but your audience being smarter than you actually is a net positive for the rest of the audience that isn't, because you'll listen to them if they correct you.
100%.
Yeah.
Yeah.
And all right, here's what I want to tell you. This is what you wrote. I'm quoting you. Just live through it. Happy Monday. Last week we crossed a big round milestone. Our little not boring family is now 100,000 strong. While I've been excited about the small victory, I've also noticed something new. A voice in the back of my mind asking me what the cynics and trolls are going to think of what I write. And
Bastards.
Here's what I want to tell you. I wrote this in the docs. I wouldn't forget. Don't do that. Forget these people. Here's why. 99% of the people who are reading you love you and want you to succeed. You just don't hear from them every day.
Yeah.
Okay? Because they're winners also. They're busy. They have lives and families, and they just don't have the time to tell you how great they think you are. Or they're indifferent. They think you're good enough. Fine.
I'll take good enough.
That's good. You're also so this small kernel of people who are trolls or whatever, it's such a tiny number. So that's the first thing you need to know. And it took me 12 years to learn this, so trust me. The second thing is, of those critics, 99% of them are just mad at themselves.
Yeah.
They're not really mad at you, but you become a target because you're in their face. You said something, you tweeted something, you wrote something, and you're just there. And they're taking their frustrations out on you. So don't go about your day now every time you want to say something being like, oh, but what are the people who hate me going to think? There's like 5 of them, and they don't matter. And here's proof that they don't matter. How many of these people fucking with you on the internet are even doing it under their real name? 0? 1?
That is one of the weirdest parts about this, is that it is so asymmetric, because it is a bunch of people. It's a lot of pseudonymous people.
Yeah.
But some of the pseudonymous people have a ton of followers.
Yeah.
So that's a weird thing.
Because they're so good at being nasty that it attracts other nasty people. But let me guess, it's like something capital, right? Almost every time. So that
Every
tells you right
time,
there, it's
yeah.
somebody who failed to launch a hedge fund or failed to launch a venture fund. You got to be you. And those people will cease being mad at you. They eventually go away. You'll have new trolls though. But it's a tiny number, just very vocal. You can't let them stop you doing what you're doing. And just recognize mostly they're jealous of you. And I will have Michael stop eventually. So I will
Frog Dick 42069 himself over here.
I will eventually make sure that he stops. But listen, you're kicking ass. What is the biggest change besides now how paranoid you are? What is the biggest change in how you're going about what you're doing given this new size?
They're really, the biggest thing is, so one, ignoring the troll piece, but the other is it does feel like even if I say and yell from the rooftops that I'm an idiot, this is not investment advice, there is still responsibility that comes with sending something to that many people. And so that's one of the biggest things that I'm thinking about. So I'm writing about one on Monday that I'm an investor in that, is a publicly traded crypto.
Is it Robinhood?
I did not.
I was just say, hold that letter.
I did not go Robinhood. I never bought a share of Robinhood, to be fair. But I just need a caveat on this one that even the founders and the people don't care what the price of this token is. So please don't buy this token. And there's still going to be people who read this thing, read this very long disclaimer that go out and buy it.
Yeah.
So that's one of the things to think about.
So I interviewed Jim Cramer for one of my books. I was with Jeff Mackey. And one of the questions, we wrote a book about being a financial pundit and talk about responsibility. You go on TV 5 days a week, 3 hours a day. You talk about thousands of stocks in the course of any given year. 1 or 2 of those stocks is going to be really, 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 really bad.
Yeah.
Right? Possibly even a fraud happened. And there's no way to really know. So he tells this great story about, I think he was in Costco or supermarket. He walks down one aisle and he's with his kids. And this woman comes running up to him and hugs him. Thank you so much. You helped me put my kid through college with all your shit over the years. And he was just talking about how everyone else is looking at him beaming. And then he walks into the next aisle and this guy wants to kill him because, a tech stock blew up in 2000. And the number one thing that you have to just do is just remind yourself, you're not someone's financial advisor.
Yeah.
You're basically talking about things you're investing in or interested in. And then people have to own their own decisions.
Yeah.
And they won't, but you can't paralyze you agree with that?
Oh, he knows. Yeah, it's enough. Let's move on.
No, I think this stuff's important. So somebody's got to tell you that, even though you already know it. I feel like you should have that reinforcement.
Thank you.
All right. So now, what are your plans going forward? Now with this huge audience, just more of what you've been doing?
I really want to do more of,
Pump it.
Yeah, so now that I have this huge audience, I can pump whatever I want. So I've been honest up to this point so that I can turn and make a ton of money. It's more of the same. I'm spending still 7 days a week writing these essays, often doing, a couple of them a week, doing a podcast occasionally, which is just me reading tired in the morning, and we'll see. Maybe we'll professionalize or add something.
Next time this kid shows up, he's going to have an entourage. He's going to have a whole team around him, a Packy stylist.
That's a good idea.
Have you thought about hiring somebody? Like, what would they even look like? What do you need help with?
Yeah, I actually have my first hire starting, and I can't say who it is yet. And not that it's anybody that people know, but it's still employed.
What's the role?
The role is really like, I'm not good at operations at all. So it's really like across both the fund and the newsletter. One, making sure that things like just kind of run smoothly. So like almost like a COO role. Two, really owning revenue on this. Like, I have the newsletter, I have the podcast, I have all these spots that like literally is me sending off a DM to somebody being like, hey, you want that newsletter spot again?
Yeah,
so
somebody has to collect the money.
Yeah.
Somebody has to invoice people. Somebody has to handle like transactions.
And it's higher level than that. It's like, go out and find out like, how should I be monetizing this? Like, what are other people doing? All of that kind of stuff. It's a generalist role also. So it'll be, this person is a lot more skeptical than I am, or like, just, which is good. Everybody's more cynical or skeptical than I am. So when I'm thinking about investments, like going back and forth and talking with them on that. So really kind of, chief of staff is
just another pack. You need help. You just need help.
This is a killer role for somebody.
It's amazing.
It's an amazing
I would
job for
totally
somebody.
take this job if I wasn't employed. You need to spend 90% of your time being Packy, right? Content, meetings, like, and all the stuff that you're not good at off your plate.
Exactly.
Yeah, this is a great role for somebody. You're probably going to find this person on Twitter.
I have this person.
Oh, you have them?
Yeah.
That's awesome.
Ah, okay.
I'm jealous. Congrats to this person. That's awesome.
That's great. And then do you see them in person, or it's not even necessary?
Occasionally, but I don't think it's necessary.
All right,
the person who gets when I get to 200,000, somebody like gets me coffee and does my laundry and all that kind of stuff. Like that person obviously has to be in person.
What's their PFP?
All right, let's do a hard pivot. Bitcoin, Ethereum have fallen 50%, and unfortunately, this person you've hired is going to have to be let go. No, because I wanted I've been waiting on this, but I want to hear your take on. This is what it feels like to me from the outside looking in. I don't talk to as many crypto people as you and Michael do. My take is that they seem more nervous this time than previous price declines, but I might be making that up.
We just had the exact same, but we both just went like this.
Okay, not at all.
No, this one's been so funny to me because it's been prophesized for like a couple of years, and like everyone's been waiting for this. Just that there would be a crash. Like,
no. We all know that there will be a crash, but this one didn't happen from an all-time high. Doesn't matter.
I don't think it particularly. Like, I've been shocked on both the public market kind of like growth tech stocks and in crypto that none of it felt risky or like, none of it felt like it was systemic or like the world was going to blow up. It just felt like some air was coming out, which is probably good.
Well, the dollar losses are real. Like it may not feel risky, but like the risk has been realized so far.
Totally.
But then I agree that they're not all selling.
I think this depends on who you're following, I guess. But for the people that I follow, nobody that I follow seems to be particularly nervous. If you've been in crypto for more than a minute, like, I don't know, this feels pretty normal, and I'm not like a crypto OG by any stretch of the imagination. This does not feel like a big deal.
I've personally just been buying more ETH. Like I was bummed with how much I had kind of coming like after it started spiking, and so instead of buying at the top, now we're back down.
Each drawdown is roughly the same as Bitcoin's,
right about
give or take.
Same rate.
It is kind of it is. I mean, it is a big move though. Like I started buying ETH probably in like 2020-ish, and I checked the other day, like, holy shit, I'm down like 20%. Not that I care. It's just interesting. Like all of the gains, and then some were ripped away.
Yeah.
John, do we have this Head and Shoulders Bitcoin chart?
I don't love the one that you used, Josh. Don't you can?
No, I know, but this is my very crude, and it's probably not even a real Head and Shoulders.
Oh no, it is.
It really is.
Throw up the next one. This is this is from Investopedia, like the definition of Head and Shoulders. This is pretty good. Okay, so the Head and Shoulders formation. It sounds silly, but there is some behavioral shit behind it. Basically, you go up, you crash, right? You make a new high, you crash again, and then you struggle. You don't take out those previous highs, and you fool everybody. And then they get trapped.
Go back to my Bitcoin thing.
Oh no, the next one.
You made a better version of mine.
Yeah.
Okay, go. Sorry, John. Sorry.
So boom.
Why is this better?
Because it looks exactly like the Investopedia one.
It looks like my ass.
It looks like it's the Investopedia one.
I know,
candles.
But like I focused in to like a more.
I'm using candlesticks.
No,
All right, fine. Use Josh's one.
Yeah, please. I can't even see what this is. It's on a black screen with a glare on it. All right, so
Chart fight.
Yeah, his chart's better.
Well, no, my chart's
Use
obviously
fucking Google.
My chart,
amateur.
I did chart this on Google. I typed in Bitcoin chart. and then I used Paint. Apple, whatever Apple.
Anyway, Apple's coming out. Go do your thing.
My point here is the psychological thing that you're talking about, which is like, think about what that feels like if you wrote it the first crash and then you got a subsequently higher price.
Yeah, thank God, right?
Right.
Yeah.
You're like, yeah, I did
Told
it right
you.
then. I did it right.
Yeah.
And then it falls again, and that next rally
Fails.
doesn't take you back to that high.
That hurts.
And then it's like, well, wait a minute, we're going back down again? Like I didn't get my
Wow, you like how I'm doing commentary over Josh's
No,
talking?
this is so good. You guys have gotten better since the last time I was in here.
No, but I feel like that I don't believe in pattern shit with technical analysis. I believe in trend, which is why I pay attention to it. This is the one pattern
It's real.
that I have personally felt in so many markets and stocks, and I know it's real. You agree with that too?
100%.
This is the real shit,
Yeah,
right?
yeah.
So then the question is, well, what does a Head and Shoulders portend?
Aha! I did the math.
Change in trend.
I did the math.
Okay, go.
So the technicians would say, and this is of course all bullshit. No, I'm just kidding, JC. The technicians would say that there's like a measured move. So where the neckline is, basically the bottom of that range to the top is 22,000. So the price target would be 22,000 from the lows,
To what?
Which would take us down to like 23,000.
To what though? What happens there? You're saying that's where buyers?
That's like the measure. That's where the target is. Obviously, who gives a crap? But that's what they would say.
Yeah.
Or
Well,
some
that would be
people say.
really bad. 22 would be a third
That'd be
of the
tough.
high.
I think the funny thing about Bitcoin more than, a stock that you would have run into this with before is that it's all trading on belief. So I don't know. I'm not a technical trader or chartist, but I would imagine that charting works better in crypto than it does with
No,
equities.
it's not that it works better. It's that it's the only thing you can go by.
Right.
If you're trading. By the way,
you're
Apple,
trading.
massive beat, and it's up in the after hours. We'll see. All right, good news. Thank God.
Give
We
it
can
10.
breathe.
You have 15 minutes to get out.
But what's interesting is that from what I could tell, the holders, they never sell, right? The people that have been in Bitcoin,
Right.
they never
no,
sell.
this is leverage is doing this.
So the point is, but what's interesting is that it's all leverage unwind, and it's all people that are puking it up. But the lack of buyers is a little bit surprising.
I think the big money is actually waiting for what you're talking about. Like, I don't think it goes to
The
zero.
wash.
I think it comes back, but when I'm like kind of just averaging down on ETH because I'm not a trader, but people who are that I talk to are like, just wait for 1,700, just buy it at 1,700, and it's at 2,400 right now. And so I 100% believe that I'll continue to keep buying lower, and also probably believe that in a couple of years we're at 10K, and I don't care.
So I'm thinking about it the same way that you are. Unfortunately, I'm doing this in our index, but also on Robinhood because it's open on the weekends. And I'm the same way. Like, and I feel like this is one of the weird things where with stocks, people do freak out. Even believers,
Yep.
right? They have a pain point where they say, like, all right, I was wrong, or I can't take it, or whatever. With crypto, it seems like there's no number. Like absent like zero, like there's no number.
So Andreessen Horowitz raised a $4.3 billion crypto fund last week. Is that right? Or announced it or something? And the woman that used to work there, what's her last name? Horn?
Katie Hahn, yeah.
Okay, she seems like a big deal. She's doing $1 billion crypto. So these people are going to be investing in crypto-related businesses, companies, startups. Like, does the price of Bitcoin and ETH not affect anyone's enthusiasm for those startups? Is it too soon for people to give a shit, really? Because this thing could be 40,000 tomorrow. I fully acknowledge, right?
For sure.
How does that how do those conversations change, or do they not change at all?
So full disclosure, advisor to A16Z Crypto. So
Yeah.
that whole group there, not involved obviously in the fundraise in any way. I haven't seen prices change actually in the early stage yet.
Meaning valuations for funding.
Meaning valuations for Web3 companies.
Right.
The way that it often works is that they go out and they either raise equity with token warrants, or they raise a SAFT. So there's something called a SAFE, which is what everybody raises on.
Team Jack, by the way.
That's the
Team
token version. Yeah, Team Jack. Not Web3 people.
I have no philosophy at all.
And so token prices are down, but I think everybody knew that they were crazy before. And I actually think there was this wide thing that you could almost you could drive a truck through, where I think entrepreneurs just didn't want to say the numbers out loud that they'd have to raise that to get to where the price would pop to
Right.
kind of once the token launched, just because, the public will do crazy things with the tokens. So there's a pretty easy way, and you have to hold the tokens for years anyway, but if you somehow had liquid tokens after they launched the token, you can get a pop pretty easily, and that was a pretty wide delta. The underlying businesses, I think any serious investor was still looking at these like an actual business, and I don't think the early stage prices got too out of hand or really rely on Ethereum
I guess
or
the
Bitcoin
question is
or-
like, of course these are actual businesses, but if you look at commodity price crashes and then you look at the common stock prices of companies that, let's say, sell equipment to natural gas drillers or build pipelines or are involved in LNG, liquid natural gas terminals or shipping, there are reverberations for the prices of these commodities rising or falling
Totally.
in those, and those are businesses.
But those are physical, bro. This is digital shit.
And then they say, and then like the analysts will say, oh, you don't have to worry about it because this company only does pipelines, so they're not sensitive to the price of natural gas. And it's like, oh, then why is this MLP down 60% from its high? It's just totally unrelated. So that's why I'm curious about how
and
that
I
works.
think this is an interesting conversation, and maybe it's just lagging a little bit further, but happening in the private markets generally, right? So with the early stage non-crypto stuff that I'm doing, I'm seeing the good companies still kind of raising at the same early stage valuations now that they were 2 weeks ago, even though those are actually probably clearer comps to the public market versions of those companies. But I don't know, the debate on Twitter right now is whether VCs are saying, oh no, the pain is coming to the early stage just to drive down prices, or whether they actually believe that. But so far, I have not seen that trickle down. I think you'll probably see bad companies have a harder time raising at higher valuations, but there's so much competition and so much cash for the very clearly good companies in the private markets that I still think those valuations
Well,
are
the
not
thing
gonna
with
get crushed
crypto
over.
is it is right now $1.5 trillion, like everything, which to me sounds very small.
Yeah.
And I think everybody has their eye on the ball that I don't really care about today, because in 5 years it's going to be so much bigger than it is right now.
But here's the thing. This is an opinion I've formed doing this 20-something years. The most important time frame for pretty much everyone, whether they admit to it or not, is the past 12 months. Like, you ask me, like, what time frame affects most people's decisions the most in how they invest, how they think, are they bullish, are they bearish? It's whatever has just gone in the last year.
Yep.
The last 3 months obviously are important, but I think most people can see a little bit beyond that. It's really tough to see beyond the last year emotionally. Well, here's the thing. Bitcoin has just wiped out all of the gains of 2021, which was a great year for crypto, everything.
Mm-hmm.
The NASDAQ hasn't, but it's threatening to.
It's down year over year.
No, but all of 21 gains.
no.
I don't know
You're right.
about that. But definitely a huge chunk of them.
Yeah.
Because January of 21 was awesome for stocks. Awesome for a lot of things. But so that 1 year period, now we're going to lap that. And now everyone's going to look at trailing 12 months, whatever, ETF, mutual fund, asset class, sector. So that now it's not like in a clear uptrend. Like, even if you accept most people don't look at 200-day moving average of, Bitcoin, they're going to look at like, how is this up or down over the last year? I just feel like the narrative gets a little bit tougher for money raising purposes, but maybe it doesn't because so much money has already been raised.
I think there's that, and I think there's this jealousy almost that people in crypto have for the people who stuck with it in 2017, 2018. There are people
Oh man, did that pay off?
who stuck with it in crypto winter very recently, who you can talk to and are no smarter than you or I, who are fabulously rich now because they just stuck with it and kept building and did the thing that they were passionate about.
Now, to be fair, it was completely illiquid. They had no choice, but go on. There was no way to not stick with it if there were no buyers.
But I mean, there were certainly, I'm talking, often about kind of like the entrepreneurs and the people building in the space who could have gone back and just built non-crypto stuff, but I think we're actually the true believers. So there's that piece that you've just seen very recently. The people who just kind of stuck it out are now worth a lot of money for doing so. There's the other piece, which is, a lot of the people building in the space and a lot of people investing in the space are not doing it, at least on the venture side, not doing it speculatively, but doing it because they believe that crypto enables you to do stuff that you couldn't otherwise do. So the business that I'm writing about on Monday, I actually think is a really good example. When are we releasing this?
Tomorrow.
Tomorrow, don't worry.
So I won't say the name,
Yeah,
but as a marketplace business that I think is a really good kind of on-ramp explainer of how kind of Web3 can tackle some of the Web2 incumbents, and it allows you to have a lower take rate, to align incentives, to do all these things that are actually like I read a Bill Gurley post from 2013, exactly what you'd want to do in a marketplace. And this just actually lets you do it without losing money and without having shareholders eventually being like, all right, you need to jack that take rate up, and then losing people out of the system.
So the people that come across this project are not necessarily judging the amount of money they should put into it or the amount of time they should invest in it based on Bitcoin's price over the last few months.
They're thinking, will this actually let me suck up as much of the supply and demand in this market as humanly possible? And what does this look like if that's the case? And I think that's true in a lot of different areas. And there's going to be some NFT projects that go to zero, although NFTs have held up surprisingly well.
That part shocks
So
me.
just an aside, why I keep hearing like the same term being used specifically for crypto NFT.
What, utility?
No, Bitcoin winter, NFT winter. Why are these people so dramatic? Like we just have like bear markets. I don't like. I wouldn't call this a NASDAQ winter right now. What's with the winter thing?
Well, they have these like kind of 4-year cycle, and it's a very short amount of time, but these like kind of 4-year cycles in crypto. And I mean, to your point, the last one lasted years. So if you look back 12 months from 2019, things were brutal the year before, and then like a little bit brutal in that year previous. And so I think they're called the winters just because they're these like very long periods where, you know, in equities, like people are still going to work at these companies and building and using their products. There was like no activity.
An NFT winter that lasts 4 years. I don't know if that's survivable for most existing NFTs. Like I'm sure the Beeple stuff will come back and probably the apes, but like that might be it.
All right,
I don't think we're going to have a 4-year NFT winter.
Let's talk about, I know we said macro's bullshit. I just want, if you have an opinion, just real quick, because I want to move on. Bitcoin and inflation. I wrote a post that like, how is this an inflation hedge with when it's down 50%, second 50% crash in the last 24 months or whatever, and a 50% draw. Okay, anyway, so the pushback that I got, and this was like, I thought this was fair, was that Bitcoin ran in anticipation of the inflation and do you want better? And I don't know about that, but fine, let's give it to them. This chart is interesting. John, throw up this chart. So this is showing the break evens. So inflation expectation, next chart, the inflation expectations versus the price of Bitcoin, and they're directionally pretty damn similar. Now, I guess my pushback to this would be, well, fine, but break evens don't exactly predict inflation very well either. So do you have any opinion on this, Packy?
I think that, I mean,
you never believed in this as an inflation hedge anyway.
I never
That's
believed
not your
this it's not my shtick. That's not my thing. The 21 million Bitcoins only thing isn't my thing. I think the interesting thing is that there will only be 21 million Bitcoin, but there will be many multiples of that Satoshis, but then there will also be ETH, and there'll be Sol, and there'll be NFTs, and there'll be, so I think it's, if Bitcoin was the only crypto that was ever created and there are only 21 million of them, like maybe interesting as an inflation hedge. I don't know. I think that there's been enough interest away from Bitcoin that it's
we have an abundance of that scarcity.
Right. Exactly. Few. So let's move on.
So we're good. Real quick though, rest in peace, Diem. Facebook is going to abandon its plans to do its own digital currency. What you have a take on that?
I have no take on that. I actually like that they tried it. They brought a bunch of smart people and companies together, and then it all kind of fell apart over
Congress
time.
was like, "Yeah, I fucking dare you."
Yeah, I mean, I think that's a more interesting point broadly. Is like, what happens in crypto is largely dependent on what the SEC decides to enforce from its rulebook, and like Facebook doing something with money is like very clearly something that Congress. SEC was going to go, like that is a move. That is a huge target.
To me, that speaks to Zuckerberg's judgment. How could he not know that? He's so smart. Is he so out of touch with what people think of him that he would think there's even a chance that Facebook could launch its own money? And that like nobody would say anything. To me, that's
he brought
wild.
together that consortium. Maybe that was a part of it, and you bring in like likable people like Stripe, who was involved for a little while, and I think the card companies, at least one or two of the card companies, were involved. So
what's interesting? They still sold for $200 million to Silvergate. That's not nothing. Like, what did they actually sell? That's a lot of money.
I think patents. I think they were like legitimately creating like real stuff.
Oh, 100%. They had really, really smart people on that team who have now gone on to a bunch of other places, but a really good team building there.
The IMF begging El Salvador to stop buying Bitcoin. So El Salvador needs like a $10 billion loan, and like no one's obviously going to give them it, but the IMF, like, which is what it exists for, and they're like vocally being like, no, you cannot continue to buy Bitcoin and get money from us.
So Packy, are you not seeing valuations cool off even a little bit outside of crypto for the stuff that you're seeing? Are we seeing any sort of ripple effect yet? Because public growth are getting squished. And these are companies that were private a year ago.
And worth more than they're worth now.
Oh, for sure. I think growth stage stuff is maybe taking a hit. I think there's, probably a lot of the stuff that I'm seeing priced a couple of weeks ago and signed a term sheet, or priced a week ago and signed a term sheet. So that hasn't quite rippled, but I do think that growth is taking a hit. Early stage is still, if you're in the $15 million post money or $25 million post money, it doesn't really matter. Obviously, your returns are 2 times better, but it doesn't really matter.
I was saying this to Josh before you got here, that I suspect, similar to what you just said, that the Series E, right, that's going to get marked down. But seed, probably A, that's
you're so far away from needing an IPO market,
is probably not going to be impacted.
Totally. And there's just so much. I mean, just like doing rough math in your head, right? Like even if you get to $1 billion from 25, you're looking at a 40x. Like that's awesome.
So you're a buyer, right? As an investor, you're basically a buyer. Isn't this better in the long run? Even if like you did a bunch of deals last year or whatever, like let's say you're a venture capital fund, you did a bunch of deals last year, maybe this pushes out the exit, or maybe it changes the dynamics in an industry such that you'll never see the multiple you thought. Okay, fine. But if you're continuing to invest, maybe you're having more constructive meetings with founders who aren't like, I need a decision right now, and by the way, the valuation's based on whatever number I came up with in the shower.
The IPO market wasn't like particularly great for tech companies in the past year anyway. Like I don't think that people were pricing it on some expectation that you'd get to the public markets at the same multiples that you're at now. I think that
yeah, but it's so violently compressed now.
It violently compressed. So obviously, particularly late stage
If you're a buyer, that's like good, I feel like.
If you're a buyer, that's, I mean, certainly if you can get the same asset for half the price.
Well, it depends.
And if that asset, I mean, I think the other thing is if you can prevent a bunch of like shittier versions of companies being built and shittier competitors being built. The biggest problem right now for any startup is getting really, really, really good talent because it's so competitive and there's so much money. If that talent actually like congeals in a few of the kind of more promising early stage companies, like that could be a really good thing for whoever gets into those. And obviously, yeah, lower prices.
That's a great point. In other words, it might have seemed lower risk to just join any startup, any old startup, no matter what stage they were at, because of how great the valuations were and how much money. If that slows down, the talent might say, you know what, the smarter thing for me to do is to join this other firm that's got a lot of talent already and not necessarily try to do this thing on my own in the wilderness.
Or founders, of like maybe that second tier of company might see that like, oh, maybe I can't get a $50 million valuation pre-seed right now. I'll go work for my friend who I'll admit is definitely smarter than me and better than me at this. Okay. I'll go be their first engineering hire or X, Y, and Z. So maybe fewer companies helps there a little bit. That said, I mean, entrepreneurs are going to build, and so we'll see how long that lasts. But I do think that'll help
even if, like, let's say we do like I think the Nasdaq will have a bear market this year. If we're very close anyway, it's not that big of a deal.
Apple just saved us, by the way,
temporarily. But even if I end up being right, some of the best startup stories that ultimately became multi-billion-dollar companies began in bear markets for tech and for like
a lot of them.
Uber and Airbnb, I think, are class of 2009. Is that right?
That sounds right.
Yeah. So that is as bad of an environment as you can imagine outside of 2002, 2003 for a startup. Like just nobody's taking any risk ever again. And in that moment, somebody did, and it doesn't take long for these things to all of a sudden get momentum when there's a recovery. So I don't think it's all bad.
And I remember, I mean, like, those were the places to work, right? Like I remember, I think my wife interviewed it at Uber, and like I remember a lot of people leaving finance or whatever else and going to Uber and going to this handful of companies.
Yeah.
And so I think that's a little bit of what I'm talking about. Maybe you see now, like if you told me where do you go work now in the early stages, like Uber was probably Series A when that happened, or maybe even a little bit earlier.
So everybody runs to Stripe right now.
Yeah, well, I mean that's the obvious one, but like it's hard to say like that is the early stage company to go work for right now, and maybe a little bit more compression there. And
Let me ask you guys this: do you have any opinion on what interest rate impact, how interest rates might impact private markets if and when we get some rate hikes?
Feels like that's a little bit priced into all of this as well.
Well, none of them are borrowing money from the bank.
But that's not the point. It is
Their investors might be.
it's just the cost of money.
It's the cost of money.
Yeah.
It's how much future growth you're getting credit for right now.
Nobody is saying, should I invest in this pre-seed or buy the 10-year? Nobody's doing that, but that doesn't matter because it's still the cost of money.
Right. It affects the discount rate that you're willing to use on whenever there might eventually be earnings. Yeah. You're thinking about an earnings stream that might be 20 years from now or 30 years from now. It absolutely affects what you're willing to pay for that today. I wanted to ask you about Coinbase and Mastercard. Does this defeat the purpose of crypto?
No.
Well, hold on. Let me set it up for the audience. They haven't read this. It was ironic to me. I remember laughing when the big gold miners were making so much money. They started paying dividends in US dollars to their investors. And I'm like, wait a minute. I don't feel like their investors want US dollars. I feel like they want gold. All right. Coinbase partnership with Mastercard aimed toward mitigating the barriers to entry for novel NFT enthusiasts to the somewhat technical world of digital collectibles that require a base level knowledge of using crypto wallets.
We need this.
And storing NFTs. All right, so buying an NFT for most people
sucks.
Is annoying.
Dude, on the weekend, I can't buy NFTs if I don't just ETH lying around. Which I don't on my MetaMask wallet.
So you set up a MetaMask wallet, then you have to move ETH out of your Coinbase, and then you have to buy the thing, and then you have. So it's not a great experience. It's not meant to be.
I would totally buy.
This is for nerds, but now Mastercard's like, oh, how about this? Just put your credit card in.
I would totally
buy
do
you
that.
the NFT.
I would totally buy NFTs with my credit card.
All right, but this is like cheating.
I think
it opens it up to a lot of people.
It opens it up to a lot of people, and the fact that you can now get a digital thing that you own and can transfer to another wallet, like that's, I guess, progress on the decentralization and Web3 front. If you pay for it in fiat, awesome. You're just bringing more.
No. That's
how did we get here?
Whoa. That's not the thing. The thing is, the decentralization.
Who gives a shit?
Always trends towards centralization, because if the NFT buyers say, "Oh, this is so easy to do it with Mastercard from now on. This is just what I do."
Dude, 99% of people are not libertarians, right? So I don't think that we're all decentralization zealots. But how did we get to a point?
Then just sell NFTs on fucking Amazon.
I just said I would totally buy an NFT with my credit card. Punch me in the head.
Just do it on eBay. Then just put the NFT on eBay then, and let's stop all the MetaMask nonsense.
That's Web 2.
Where we're going.
That's boomer. That's Web 2.
Exactly. Web 2 is easier to buy shit than Web 3. That's all I'm saying.
100%.
I think
I'm not going to live forever. I don't have that much time.
The argument here is that if you make the on-ramp easier, I mean, the best example, we have a big NBA Top Shots guy over here.
Whoa, not anymore.
Huge NBA Top Shots guy over here.
He doesn't introduce himself that way anymore.
Hey, Michael Batnick, big NBA Top Shot guy.
It's not.
But I mean, the number of people that you hear building in the NFT space now, building like really like decentralized, maximally decentralized NFT products that do all sorts of crazy NFT and DeFi combination stuff, they started buying NBA Top Shots, which is a fairly centralized experience. Dapper Labs and Flow itself, like that chain will get more and more decentralized over time. We'll give people options to start, centralized and then move
Flow
decentralized.
Flow is a chain invented by Dapper Labs, so the seller had its own blockchain.
Actually, when I bought my first Top Shot, which was my first NFT, I DM'd you and I told you, and you were like, I can't believe I'm like your foray into all things that you're going to lose money with. I love it. Or I hate it. I can't remember what you said exactly.
He reminded you, I told you I'm an idiot, right?
Yeah.
But that's the point. I mean, I think if you can give people a menu of different levels of decentralization and ways to access the space, that's a great thing. And then over time, the people who want full decentralization can send that to their MetaMask wallet. They can do all sorts of stuff in the totally decentralized way, or they just like this digital thing. They want to participate. And so they keep it in their Coinbase wallet in a centralized exchange, and they paid for it in MasterCard, and that's totally fine.
Packy, you'll appreciate this. I was very skeptical of the fact that NFTs would onboard people into crypto. And this is an anecdote of one, okay? So whatever. But
I think it will.
But my friend, like 3 weeks ago, who's been like texting me about NFTs here and there, not that I know anything, obviously, but just like whatever. He bought a doodle. He split a doodle with his friend, and he had never owned crypto or anything, and that was his first foray.
What made him do it? To make money, or because he really liked the thing he was buying?
To make money.
So so it's just
His
Another outlet to speculate.
brother-in-laws are messing around, and they've been doing it for a while. And they finally, they finally convinced him to buy one. He's like, I want to buy a blue chip one. So I mean, that's an expensive project, and he had never bought ETH before.
See, and so then he understands what it's like to buy ETH. He has his first doodle. You join the community. You get to see other people with the profile. Like that part's all fun, and he can either choose to leave it there or he can choose to keep going and try new things. What I think is super interesting is that I'm now seeing projects that are using NFTs to represent a piece of land on which people are going to grow trees to pull carbon, out of the air and get carbon offsets for doing that. And so NFTs, which started very much as crypto kitties and then profile projects, are now just like the technology of a non-fungible token is being used for all sorts of things. So that to me, if you look at a snapshot of any of this, it looks absolutely silly. And if you look at a snapshot of oh, cool, yeah, this is the endpoint that everybody's buying NFTs on Coinbase with Mastercard, then what the hell was the point? But if you look at it as this march towards, people experimenting and trying new things and building on those things, and some people coming into the space and going more decentralized and some not, I think over time you'll wake up in a decade and it won't be called Web3, probably won't be called NFTs, and all these things will have just been normalized, and they'll be used where they're useful and they won't where they're not.
What's the market cap of NFTs? 30 billion, I think I saw recently. Does that sound about right?
That sounds ballpark right.
The further these things push into the real carbon-based world, the more likely it is that they'll be held up against the Howey test, and regulators will say, all right, what you're doing actually is not decentralized or digital at all. You just came up with a way to pay for something that in the real world we would consider to be a security. So that's a consideration.
It depends on the asset for sure. People talk about, if you fractionalize an NFT, then it certainly runs into the Howey test and all of that. But there are other things where it's just if people are spending 50% more of their time digitally, what do you do to let them own the things that they use and interact with digitally? And an NFT at the base, without the speculation piece attached to it, is just that token that you attach to a digital thing to say somebody owns this is scarce, here's the provenance of that thing. And so I think NFTs from that perspective will, grow in a pretty huge way, because we'll want to own the things that we use in the space that we spend most of our time, whether that's immersive or not immersive or whatever else. Just being online all the time, we'll want to own those, those things. And I think it'll go into people's code will be backed by an NFT, and all sorts of little things will happen that, again, we wake up in a decade and it's just second nature that your thing is tracked.
I think that's mostly right. And then the question just becomes what are the benefits of ownership of all of these things? And that's the part that there'll be some things where it turns out, wow, that was really smart. So-and-so bought this NFT, whatever. However they bought it is not the thing. It's that they had the foresight to say, I don't want to just use this service. I want to own a piece of it. Some of that will turn out to be really prescient. Obviously not all of it, but that's the same as in regular securities markets. So it's not going to be materially different. 10% of things will look great, let's say.
100%. And then there'll be things that look good on the margin, or look okay, but in aggregate look great. Think about open source software. There's a bunch of people contributing to code. It might not make any sense to track down the guy who wrote the code months ago when it's used in this other project. But if that code is backed by an NFT and there's a smart contract that just pays out, a couple of cents, and we're not paying $400 or whatever in gas fees.
Look at Linux and how many people contributed to that over the years, and then Red Hat finds a way to put a great wrapper around it. And did they sell to IBM?
Red Hat? I think so.
I think so, yeah.
Right. Now, imagine there were a scenario where some of the early people working on Linux were in the late 90s, had some version of a royalty contract on at least their contribution to that code.
And that when Red Hat came about, because there still should be a Red Hat, there should be somebody that makes it easier to work with that.
That's the equivalent of Mastercard letting you swipe to buy an NFT. Is the Red Hat version.
That person then has to pay, has to use Linux tokens, and then the value of the Linux tokens that everybody else who contributed to the project get more valuable because Red Hat built on top, and as they use more and more resources from the underlying protocol, they all kind of grow together. That's the whole kind of hypothesis.
What do you think is the closest, people talk about real world application. How close do you think DeFi is to penetrating into where somebody normal who doesn't sit in front of a screen 24/7 can begin to understand?
Yeah, so this is going to be bag pump corner a little bit, but a company called Meow that I invested in
Meow?
is Meow. It's the idea
MEOW?
MEOW.
I don't know why, but I'm in.
Meow.co. So
Duncan, how much you want to put in?
I'll put down 10% of my net worth.
10%. Okay.
10% of your net worth. And so now instead of 0% in your bank account, you'll be earning 4%. But the idea is, so if you're familiar with BlockFi, think BlockFi, but for corporate treasury, right? So like if you're a CFO of a company, you have $100 million on the balance sheet, X is sitting in your bank account making almost zero money. You take a portion of that, you put it in Meow. They'll help you earn up to 4% now, maybe more later. If you go with kind of crazier DeFi stuff, you can move your risk curve. You're putting US dollars in, you're choosing an interest rate and a level of risk, and then you're getting interest back out in USD. And then there's a bunch of DeFi stuff happening.
So
in the
Meow
back.
is not a token; it's a service.
Yeah. So
Okay.
not everything is tokenized here. Meow would just be a service that makes
What
it
are they
easy.
doing? They're taking that cash and they are putting it into staking things and then spitting the money back out at you.
So for now, it's kind of just crypto lending. Over time, they'll
Yeah.
they'll plug into more kind of DeFi protocols, maybe let you stake and do all sorts of stuff. But
And they're doing that on your behalf.
they're doing that on your behalf. And so,
So they're a broker in this scenario, right? Or no?
They're
I know They
not.
don't call themselves that, but
yeah, no, they're not, and they can't do some things that brokers would do. Like if they went through other platforms, they couldn't actually get paid for it. So
Right.
they don't do things that brokers would do. But they have a bunch of. I mean, they launch.
You're an investor in this?
I'm an investor
All the
in
name
this.
brands are on here. Coinbase, Lux, Jump Capital, Castle Island, Slow, Gemini.
And they
where do they
didn't put not boring.
custody at Coinbase? Oh, there's Gemini too.
Yeah, that's all their investors. The team came from Gemini, so they're like hardcore crypto engineers. But this is a part of a broader trend of, they call it like the DeFi mullet, where it's just like a very clean, fintech looking thing in the front, and then all this DeFi stuff happening in the back. I think Meow is one of my.
But that's
biggest
the
bets on
right
that trend.
approach because we're asking like about real world application. Like the CFO of a company doesn't want to screw around with code.
Yeah, we don't want Bill Sweet yield farming.
Right. Our CFO. So we're sitting on X dollars as a company, right? And we know we have to pay out some of that and some of that we don't. It'll just sit there. So if we just say to ourselves, okay, we're cash managing this, but it's hilarious. It's like, do you want 2 basis points or 1? And then we could take like a percentage of that, turn it over to Meow, and then Meow will say, okay, here's the interest rate that we can earn you based on whatever you
So
told
the
us.
inspiration behind this was what? Super Troopers?
Yeah, exactly.
No, so the inspiration behind it, it's funny. I had Brandon, the CEO, on my podcast, and that was the first question I asked him. And his point was like, look, we want something friendly. We don't think the future of all this stuff belongs to something called like BitBlock, or like there's just these very like you're naming the thing that you're doing kind of names in crypto right
So
now.
Meow is superior to Woof because dog has a bad connotation in
Wolf would be
investments.
tough. Maybe Bark.
I actually saw a company that does this, but it's not B2B. I guess it's more B2C, called Donut App. Have you seen that one?
Yeah.
Looks like they're doing something similar, but for regular people.
Yeah, and I think Chime or Current started offering crypto
Oh, really?
yields for
We met that guy. We
Love
liked
that
him.
dude.
Yeah, we had dinner with that guy with Dan.
Oh,
Actually,
Dan
with
was telling me he
Nathan.
met him. Yeah.
Yeah, that guy's a lunatic. We love him. We absolutely love this guy. You gotta call that guy up
I
again.
love that guy.
Let's end. All right, I want to go back to Robinhood briefly. Not about earnings, which seem to have
Wait,
been.
can we talk about Apple for 1 second?
Yeah.
So Apple, like all kidding aside, just reported $123 billion in revenue for the quarter.
Sick. I mean, it's the Christmas quarter.
It's
it should
up.
be.
So what? Fine. It's up 5% in the after hours. Who cares about that? But they did $123 billion in 2011, the entire year, which was an astounding number. Think about where the stock was then. It was on fire.
Yeah.
$123 billion.
It's almost as though the stock price should have gone up since then, irrelevant what the Fed did or not, or index funds or whatever people are saying is the reason Apple is where it is.
Just like for comparison, freaking Facebook and Target both did $100 billion over the last 12 months, and Apple did 123 over the last
Apple's
3
doing that
months.
every 90 days.
It's unbelievable.
Yeah.
So my dumbest take on Twitter was that Apple won't be a top 10 market
Yes.
cap company in the
Let's
next.
go right.
Yeah,
let's
yeah,
go
yeah.
right to that. Why are you doing that? Why are you saying that?
You stupid son of a bitch.
You might be right, but still,
John, throw up this chart.
So I might have to.
I'm unsubscribing now that you told me this.
I'm gonna write this one up.
Wait, time
maybe
out.
at
What
some
is
point.
your take? Is that what? Be very specific because I'm gonna have Kalshi put this bet up. Actually, it'll be a 10-year bet.
Oh,
but we're going to do this.
I like that.
Apple will not be a top 10 market cap company.
By
Do you think it'll still be a top 10 by revenue?
That's a good question. I thought about this for 3 seconds when I tweeted it.
Doesn't matter.
So
It's
let's
out there.
We're gonna hold you to it.
let's go market cap. I mean, who knows? Let's go market cap.
Okay.
I think that's what I tweeted. So let's stick with the original. There's a couple of different things. One is the chart that we have up right here, which is that the top 10 turns over all the time. Apple's been there for.
This is a chart of the top 10 companies by market cap from
Every 5 years.
1965 to 2010 in 5-year intervals, and there's very little repetition. Companies that continue to stay on that list, obviously, and the 1960 class is hilarious because
That's a good class.
Eastman, Kodak, and Sears are in that class. So okay, we know this. This is just like
But Apple?
natural.
So there's that. And this was that was kind of my backup point. The real thing was and this is, I doubt I'll be able to write 10,000 words on this point, but it just does little shitty things like that. Everyone believes that, Apple degrades their phones when the new phone's coming out. That's obviously not true, but it's a conspiracy theory that's believable because they just do these little things that are shitty.
They said that about Sony.
They charge you with, all the dongles and whatever, the way that they treat. This is not
It's below my line.
yeah, this is not a moral argument or anything else, but just the fact that they charge developers 30%, there's just enough little things like this that pop up that I think one of those cracks for a company that is so dependent on brand, I think enough of those cracks, and a decade is a long time, just grow over the next
Somebody
decade.
has to come along that is as high quality as Apple and not looking to make as much money as they are.
I know.
Who is that going to be,
I know.
realistically?
I'm
not saying it's
the
impossible.
Web3 Apple.
No, it would have to be a Chinese company that somehow gets itself into the hands of U.S. consumers without our government having a huge problem with it. But look what went on with TikTok at the end of Trump's presidency. It was such an easy pinata for him to just turn around and beat on when he needed to. So what Chinese company even could do that? It's hard to imagine.
It's all hard to imagine. It's also crazy that in the year of our Lord 2022, the most valuable company in the world is a hardware company. That also, there's just enough. I'm going to be wrong, I'm sure, about this, but there's enough little things that don't make sense. I think one is just the slight antagonism of the consumer for a company that's all about building great products for consumers.
People love. There's not as much antagonism as maybe you would expect there to be. People fucking love their Apple stuff.
I'm tweeting this from my iPhone. I have my Mac here. So I understand the hypocrisy of all of this. It just feels every
Other than
year
that, it's a really great idea.
You
Listen,
move
it's
further away from Steve Jobs. You try to squeeze out a little bit of extra margin somewhere. And over time, those things compound. So whether it's by 2030 or 2040, that I think will be the reason that Apple.
It's just a spicy take. It's just a spicy take.
But I didn't even mean it to be
little spice.
There's just
But you
enough
tweeted
things,
my spiciest take.
there's just enough things that annoy me about the products, even though I continue to buy them.
The AirPods had nothing to do with Steve Jobs, and they are awesome.
I love my AirPods.
I'm on my third
Although
pair. Oh, stop!
the connection
They're
is
awesome.
Once in a while. No, you got pissed. You
they
got pissed.
don't. They don't have the best sound. As someone who deals with a lot of podcasts where people are recording on,
They don't have as good sound compared to something else that's wired or something else that's wireless.
No, Duncan means the mic.
Yeah, I would argue that a lot of wired ones that have the mic down on the cable on the cord are better.
Of course, because it's on the wire.
You know what?
I
Great.
agree with that.
The big over-ear Apple headphones I've heard are amazing.
Those exist?
I never. What, Beats?
No. They have their own $600 over-ear headphones that everybody says are incredible.
I've never seen those.
Where do they?
yeah.
Where do they sell those?
I'm sure on Apple.com.
Really?
Yeah.
I've never seen. I've seen them selling Sennheiser stuff or.
Oh no.
or
They have
something.
their own. These.
Let me say.
Oh, whoa.
Wait,
They're
what?
beautiful. Apple makes great products.
They're
It's probably a
gorgeous.
dumb take.
I never saw these before. $550. Oh
No, dude, it's not five. It's 91 a month.
Oh,
for
that's
6
it?
months. No interest.
91 a month for 9 years because you're going to upgrade every.
I mean, think about how much you wear your headphones, all right?
Yeah.
Amortize that over every minute you wear your headphones.
Today, I went to Best Buy to grab a cord for my charger. They don't have any. They don't have these ones. They don't have these ones. They are out.
Of what?
Chargers.
Oh, really?
I said, you have to be kidding me.
Why did you go to Apple Store?
I went to Best Buy.
Yeah, but I'm asking why didn't you do? That's a Mac. Go to Apple Store.
Where's the Apple Store? It doesn't matter. My point is supply chain. It's
Miracle
unbelievable.
Mile on Northern Boulevard.
I'm in the city. We're in the city.
Oh, there's no Apple stores in Manhattan.
Dude,
there's one at Grand Central.
Grand
right?
Central.
My point is, I'm just talking about supply chains. The fact that Best Buy doesn't have any Apple chargers is insane.
That
Joe
is crazy.
Biden should really be ashamed of himself. I have to say. I want to do this thing. I want to do this thing on Robinhood. 1 year after GameStop, they put out a letter on their blog.
When?
I'm glad you're in the doc. 1 year ago, on January 28th, 2021, a new generation turned the act of investing into a mass movement that revealed the power of individual investors.
That's a fact.
True. That extraordinary market activity led our clearing broker to place temporary restrictions on certain securities, and Dave Portnoy almost got me arrested.
Wait a minute. Why,
No, they didn't write that.
Why doesn't Citadel buy Robinhood?
Cut out buy the middleman.
Yeah.
That would be a little too on the nose. If they wanted to, they could, though. It's very cheap. So basically what they're talking about here is how their net capital position has greatly improved since then. As of the end of 21, Robinhood Securities net cap, $2.8 billion, 21 times what is required by the SEC, putting us in the ranks of the largest brokerage firm. All right, so now the company's worth $10 billion and its net cap is $3 billion. So you could actually buy that company for $7 billion right now, if you think about it.
No, I don't think that's. They're not saying that they have that on the balance
Yes,
sheet.
they are. Yes, they are. As somebody who worked at small broker dealers for many years, net cap violations could literally put you out of business. Not Robinhood, apparently, but anyone else that dared have a net cap
Who's the
violation.
buyer? Who's the buyer? Deutsche Bank.
Yeah, I don't think so. It's. I don't think you can buy it. Maybe Goldman Sachs or Morgan Stanley could buy it.
SoFi. They're not big enough.
They're not big enough. I don't think.
Just borrow money.
Goldman would be interesting.
Yeah, Goldman's doing a lot of tech stuff.
And they're doing it well.
Yeah, Goldman could do it because Goldman is, I don't think, afraid reputationally
No.
after what they've already lived through. Like, I almost feel like they'll have a week of press and then whatever, we own Robinhood. So,
SoFi's about to be bigger
Do
than
you-
Robinhood at the open. That's
Do you
amazing.
think like the squid thing is even a
no,
like? Do you think anybody cares about that anymore?
No.
The people that care are 58 years old.
Yeah.
They
That
really
was
don't care.
2011.
Yeah.
What year was? I mean, that was a long time ago.
Yeah, I think they could do it. I think Morgan Stanley could do it too, potentially. They bought E-Trade. I wouldn't be shocked. Anyway, I thought it was interesting that a whole year has gone by. Anything else worth mentioning there? Not really? Okay.
I'm truly stunned, like honestly stunned that Robinhood is down 85%. And not just Robinhood. Like if you looked at all of these names that are down 70, 85% and that's all you saw, you would think that we're in like a violent recession. It's unbelievable that this is happening. It really is. And it's not isolated. There's tons of names.
I got corrected by Liz Ann Saunders on the air yesterday. I said something that was true, but I missed the bigger point, and I think she had a little gleam in her eye correcting me. But basically, I was making the point that like last year was the really aberrant year. Like this year, I don't want to say it's a normal year because it's only January. Last year, the S&P did 30%, and the deepest pullback was 5.7%.
What did she correct you on?
She's like, okay, but Josh, the average stock was down like 19% at some point last year, which is pretty damn near a bear market. Like,
The average stock is always down 19%, I feel like.
but just making the point that yes, if you owned the SPY, then it was a very strange year. But if you owned individual stocks,
She's right.
you
She's
had
right.
tons of volatility,
Yeah.
and that's definitely true. So shout out to Liz Ann, she's right. I should have brought that up.